Hi, everybody. It's Dr. K coming at you from the sunny summer that is the Northern Hemisphere, and Gil is certainly part of that in Playa del Rey, California. Um, the markets look to me like they continue to weaken here, and we are seeing a number of leaders stumbling around. We also see some leaders, as we put in the report this morning, that are holding their ground fairly well. So again, it's a bit of a bifurcation, but the market is certainly in a downtrend, the biggest downtrend it's been in all year. But that's to be said that the last two downtrends were very short-lived at 3% and 3.8% corrections in the S&P 500. And this one is about, I guess, a little over 4% right now, right at its 50-day moving average. The NASDAQ also had, along with the S&P, two minor corrections this year, both under 5%. Right now it's somewhere about a little over 3% from its peak. And so we just have a wait and see attitude when it comes to understanding what the market is doing and where it's going to go. Essentially, we have a bit of cross currents, of course, with quantitative easing. It's firing on all cylinders still, and it's going to do so for the foreseeable future. The economies around the world seem to be on the mend, but again, unless they really start to move forward, I don't think the Fed's going to turn down the QE spigot. I think it's going to continue at the current pace. So a question remains to be seen is whether the economy is really truly recovering or not. Obviously, Europe and the UK are in the midst of recession. I would say that the U.S. is as well, but the U.S. has a way of massaging its statistics to show that it isn't. I believe they say over here in London that the Bank of England they're not a whole lot different than the U.S. in the sense that the statistics are probably massaged quite a bit. Nevertheless, the UK is certainly in a recession. It has been for over a year. Europe the same. And I'll believe it when I see it, essentially, that the economy has indeed turned around. But until then, I think QE is going to continue to flow, and that means that the markets will probably find a floor somewhere where we're at. This is conventionally where a lot of the models have gone to sell signals, and the MDM, market direction model, would have as well, but it's aware of QE. It has been aware of QE, so that kept it out of trouble earlier this year. It had one sell signal, and that was quickly reversed to a cash then a buy signal. But at least it's not getting whipped around like it did back in 2012, where you had the market come off just enough where things looked like all hell was breaking loose. Leading stocks started to break down as well, and the MDM would go to a sell signal, and that would be the floor, the QE floor, where enough of this cash flow comes in to support the market. And I think that's probably where we're at right now. But again, I don't want to make any second guesses on where the market's going to go. We don't know that. Right now, I would say that we are still in a cash position, and it remains to be seen whether we get further selling to the downside. If it starts to accelerate, then the model is not going to stay in cash. It will attempt to take advantage of a downside move in the market, but I believe based on history so far and based on where QE is at right now and for the foreseeable near future, the market will more than likely put in the bottom, and it will probably go back to a buy signal in the days ahead. Gil?
Yeah, I think my view might be a little bit different, Dr. K, in that I see this downtrend as totally playable in individual stocks, and I'm wondering though, with QE as a factor, what would it take to send the MDM to a sell signal, and what do you think the danger would be if at that point it becomes so obvious on the downside that it actually turns out to be a low? Is that mainly what the model is guarding against right now?
Yeah, it's guarding against being whipsawed, because that's what the market's been doing since 2012, and I want to qualify that just because the MDM is in cash doesn't mean there's opportunities on the short side or even the long side in the right stocks. Right. And therefore, the other services, of course, remain highly active, and we remain vigilant on our screens because there are opportunities out there. And that said, when the as far as the model going to a sell, it could be done one of two ways. First, it could be done with acceleration to the downside, where enough selling pressure comes in that's greater than the selling pressure that we saw, say, in 2012 when models went to sell signals, including mine. The other way the model goes to a sell signal is we get a weak bounce. Say, starting next week, we start to see the markets trying to recover, but we're not seeing evidence of that in the major averages or the leading stocks, and the model may seek an opportunity to go into a sell signal into an upward move in the general market.
I see. Yeah, I think in that vein, I'll give everybody an idea what I'm looking at in terms of the action of the indexes right here and right now. You have the NASDAQ here holding above, well above its 50-day moving average. The S&P is at the 50-day moving average. So the S&P is at a logical spot to bounce. And we tried to do that this morning, but that's failed. So what I'm looking at now is I'm recalling if we go back to mid-April right here, and at that point in time the market was coming down. The S&P actually found support at the 50-day moving average. It was holding up better than the NASDAQ, which had broken down below its 50-day moving average. Now you sort of have that situation reversed where the NASDAQ is holding above its 50-day moving average and has more room on the downside before it hits it, and the S&P 500 is at it. So I'm looking at a scenario here where you could have a break of the 50-day moving average by the S&P 500 that coincides with the NASDAQ hitting the 50-day moving average, and that might be where you start to bounce. If you don't, and I consider that at least a 50-50 probability based on the way a lot of these leaders are acting, I'm not seeing very many stocks holding up here, Dr. K. I see a lot of damage all over the place. So my tack here is I'm looking at some of these stocks that were formerly leaders turning into late-stage base failures. And so I'm actually leaning towards watching a lot of these things as they develop. But there is a logical scenario for a bounce, and that might give the market direction model an opportunity to go to a sell signal if the bounce is weak. So, and I think you'll probably the model will be able to discern that on a weak bounce. That's my guess. Would you concur there, Dr. K?
Yeah, it is always looking for that sort of entry point. But more conventionally, and we are not in conventional markets here with quantitative easing manipulating things, but conventionally it will look for distribution days to cluster and then issue the sell signal standby, then a sell signal, and of course on the long side it will look for a legitimate follow-through day accompanied by confirmation in leader stocks.
Yeah, I'm looking at some names here. For example, on Monday morning in the chat room, I was telling everybody it looked like CAT was ready to break up to the downside, and it is. Looks like it's heading for a low of 80. I consider most of the shorts right now to be somewhat tactical. I don't know if you're getting into thematic shorts. That's one of the reasons we haven't put out any short sale setups. We're kind of waiting to see how some of these develop. But I'm definitely seeing a number of tactical situations. For example, LinkedIn on this rally up into the 10-day moving average, I think becomes shortable. It could go a little further. I think ultimate resistance is up here. This black line is a 65-day exponential. That could serve as an area of resistance, or it could theoretically go all the way to the 50-day moving average. That is going to depend on the general market. A lot of times the way these play out and the extent of any bounces and rallies and react rallies is determined primarily by well, number one, the position of the stock at a logical area to bounce, such as LinkedIn right off of this little flagging area on this side, and the market also pushing higher. So, we had a bounce attempt this morning watching LinkedIn, and I've been shorting it since up on top of here, and we've been talking about this for a while. And it's now following the 10-day, so that, to me, becomes your upside near-term stop, but ultimately I think you're looking at 171, 170 up in here, close to the 20-day moving average, which is this an exponential 20-day, which is what I use. It's not that much different from a simple, because it's pretty short duration moving average, but that's up around 172.34, and that might be your maximum area of resistance where you'd want to set a stop if you're doing that. Some other things I'm looking at too, cores. Now here's an example of what I'm talking about in terms of late-stage failed bases. You've got a base here, and I guess you could say you have 1, 2, 3 bases really going nowhere. The insiders are selling out of the stock. The company's namesake has dumped all his holdings. The CEO has dumped pretty much all of his holdings. You got to wonder why. If Michael Kors is really such a great growth story going forward and has potential, say, of a Lululemon or something like that, the way that stock has acted over, say, the last 4 years or so, you would think that they would be hanging in there. And it's curious that they have bailed out. Kors doesn't have a lot of short interest in it. You had this big move on this breakup. It's a very volatile, jagged pattern. Not what I would call necessarily the most constructive base. It is sort of a cup here. You know, maybe it's forming a handle, maybe it isn't. I think the tell would be a breakdown through the 20-day moving average. Notice how it's sitting there, and the way I think most traders are looking at this, you may have they're sitting in here thinking, oh, it's coming in. The volume is drawing up a little bit. It's going to bounce off the 20-day, and it fools everyone and just keeps going lower. I know Stratasys didn't even bother to stop at the 20-day, cut right through it. And you can see if you get a little bounce like this, the break through the 20-day sometimes is where you can come after these, but you got to keep a tight stop in case it reverses on you. And I think a lot of these 3D names look like they could be trouble here, and they could be these late-stage, not necessarily pods. I mean, this is pretty deep base. It's pod-like. To me, the whole pod concept, you got to look at Chapter 6 of our first book. To me, the whole pod concept is more of a hot stock that goes straight down, straight up. But this almost qualifies. You know, it is a big, ugly cup, and it could work, though. I've seen big, ugly cups work before. And you're coming down to an area of support. Now you've broken the 20-day moving average. So the way I look at this could be shortable using the 20-day moving average as your stop. But keep in mind, you're testing things out here. You know, if they start to break, you maybe get a move down to the 50-day on a nice, quick tactical short there, and then it may take more time to set up. But you never know; they could break down very sharply. Anyways, this sort of thing that I'm looking at, you know, CRM. For those of you who were on the chat room last week, we were talking about CRM right here at the 50-day moving average. And you know, that thing blew apart. You undercut this low, which looked like a cover point, and intraday it did rally back up, but it basically back into 40 or so, and that's resistance now on the upside, along with the 200-day, say 40.84 right now. That's your upside resistance, and this thing looks pretty ugly from here. And this is something breaking down from a late-stage base. So you know, this sort of go nowhere type action for a period of time. That's what this stock has done. And now it's breaking down. That, I think, is a bad sign. And another stock that I think might, you know, similar to that in terms of going nowhere for a while might be Kors. But we'll see how this pans out. So they're holding the stock up today, but you know, I think that's because they're seeing support here, and possibly, if you're looking at, depending on how you want to draw this, you can draw this right here, since you have more tops here, and say that it's trying to hold this breakout, this trend line breakout point. And that's a possibility too, but that's to me a tester. And some of these other things are coming down harder, like CAT and like CRM. I think LinkedIn on the rally, you're looking for resistance at the 10-day moving average. Another name I think looks shortable here is CF, Consolidated Fertilizer. This one, if you're looking at it, you got a left shoulder, a head, and you can see the big volume breakdown right here defines the right side of the head. And now you're working on a right shoulder. Notice last week on the weekly chart here, you have light volume and it stalls. So it's really running out of gas a little bit here. Yesterday you had a big outside day reversal. And now what I'd be looking at here is using the high of today, 193.18, as probably a near-term stop, looking for a breakdown, at least to the 50-day or undercutting this low. But this could go further because you do have a head and shoulders pattern. And it's setting up, so we'll just have to see where this thing goes. But that's one possibility. So somebody's saying that Michael Kors, they own some. Yeah, but they're dumping so much, I don't understand what the deal is. Would you be selling into this VMware bounce? Somebody asks. Selling what? I wouldn't own it to begin with. If you're talking about selling it short, would I be? I don't know if I would be. I guess you could. You know, it's really not a question of whether I would be. It's more a question of whether you would be, and what do you know here that makes you confident that you want to short the stock. So to me, it's broken down a fair bit, so it's way down there. You know, it's come down a ways. So, you know, it undercuts this low here, and that sets up an undercut and rally. So, you know, I'm not so sure I'd be shorting it, but you know, I don't really pay attention to this one. But really, you should be operating on the basis of rules. If you have to ask me whether you'd be selling or whether I'd be shorting into VMW's bounce here, then you don't really have any idea what you're doing. You're shorting stocks, and you don't really know what your parameters are that you're going to try to short into. So, for example, if you think that the 10-day is going to be a resistance, then sure, you could short into it and use a tight stop somewhere nearby. But just getting my opinion, do I know whether this is going to roll over? I don't know. But are you in a logical position to come after it on the short side? Maybe. But not really when I'm playing. I like some of these other ones that are working so far. But just the one thing I just want to make clear is like if you got to ask me if I would be doing something on the short side here on some name that I have never even talked about, at least not recently, then that tells me there's an issue with you not really thinking through how you're going to handle the stock and what it might do. So that's what I really want to emphasize here, not so much beating somebody over the head. Somebody asked me to discuss the short on CF. I just did. HLSS, space looks constructive. I don't know. This is kind of a volatile stock. The group has been having some problems. I'm not going to buy it. How about you, Dr. K? Are you going to buy this home loan servicing?
Yeah, it hasn't been good before, and it's it's still not showing much evidence of any interest on my part.
No, same here.
Fundamentals that fundamentals they're interesting with the sales just ramping up like it is, but institutional sponsorship dropped in the last quarter. Earnings are looking good, but the technicals of this don't excite me a whole lot. So, I mean, there's better stocks to play. If you're going to play anything alongside, play the best. This is not the best.
Yeah, and it's also housing, and housing's been having some problems. Someone's asking me, do I consider Ryland a short? It might be setting up into one. You see you have the failure here right through the 50-day moving average. If you're really on top of it, I guess you could have shorted it right at the 50-day, but, I don't know if you can short it here. So, and again, if you're asking me, is Ryland a short here, it tells me that you don't really understand shorting well enough to use some judgment of your own, seeing that, number one, it's broken 7% or so past the 50-day moving average on the downside. If you short it here, you're risking a rally back up to the 50-day, which is really the place you should be shorting it. So, again, I just want to be clear on this, because shorting is a dangerous game, and I get very nervous when people think they're going to start following you or randomly doing stuff without understanding how you're going to handle the trade and what the parameters of the stock's movement are. In other words, where are the moving averages? Where are the areas of support? Just the idea that, would you short this here? It's like, come on. Maybe I would, if I was already short up here, maybe I'd add some. I don't know. It really depends on my own position. ALK, another one. This broke down through the 50-day moving average. So if you were on top of it right there, you probably could have hit it for the initial move. A lot of times these things will break down and then they'll rally back up into the 50-day. But from here, to go short it, it's in midair, it's undercutting this low. Why would you do that? And why would this necessarily become a short here? I'd be looking for some kind of a rally. Notice how it seems to find resistance at the 65-day exponential moving average here on this little bounce attempt after this first break. But from here, you're just you're in no man's land. And yeah, maybe it eventually goes to the 200-day, but how do you know it doesn't whip you back to 60 in the 50-day first? So those are really, again, the parameters of the trade. And if you're just asking me, oh, is this a short here, then you really don't understand shorting. And I would urge you, if you don't understand what you're doing, don't do it. You'll get your head ripped off. I mean, theoretically, I know what I'm doing, and sometimes I get my head ripped off. TDC, shortable area. Well, again, you're looking at a stock that has it's not much buying interest, but you got to look at these rallies here. I don't know if this is a shortable area. It's holding above the 50-day moving average. I'd like probably to see it break down. On the weekly chart, you're starting to see selling volume mute here. I don't know where we're going to finish the week here, but it doesn't really look terribly negative, and you already have come down a good ways here. I'd say, what is that, Dr. K, about 35% or so?
Something like that, yeah. That's about right.
So, so I don't, and try to be anticipatory. Like watching today, I'm watching LinkedIn, and watch this rally today. Let's look at the handy-dandy 620 chart. And you can see here that you just got a 620 break. So this might be where you could start testing short sale position using the 620 chart, which is what I use, and that's what I'm doing right here, right now. And it's starting to break. You already had the MACD cross a while ago. Some of the guys on the chat room have been using the 620 model, and they're starting to understand it. I do go on there and I'll talk about it, if that helps anybody grasp this whole thing, but it's pretty simple intraday chart, and it's really not rocket science. So I got, if I got LinkedIn, whoops, let's go, rallying into the 10-day, so I look at that as a potential area of resistance. If this is coinciding with some movement in the 620 chart, then I'm looking for, I know you're going towards resistance, 168, somewhere there. It might stop sooner, which it did. So I'm just looking for this thing to give me a signal. Once it does, I can come in and test a short, and my stop is the high of the day. So that's probably how I would be working something like this, and it's probably one way that somebody could be doing it. Coors is another one, watching this today, and you're getting this little weak bounce, and you've had these weak bounces in the stock over the last few days, and notice how each day it seems to not be able to get up as high. So I'm betting that this thing's going to blow to the downside and break the 20-day. That would be my ultimate short sale signal, but I can get a head start by watching it today and seeing if you get a sell signal here. You've already crossed on the MACD, so you're on the verge of one, and this thing starts to break down. This could be the spot to come and hit the stock, and I think this would be a late-stage failed base that at least has potential down to undercut this low, which would take you right to the 50-day moving average. So that's a quick tactical short. So let me see if I can pick up some other questions here. We've got a bunch of them coming in. Let's see, EXPE. Again, it looks weak, but you're not going to short it here because you're undercutting this low, and for all you know, it's going to try and rally to the upside. So where you wanted to be shorting it, you see this bounce up into the 200-day moving average. That's a short sale point right there. So you're not shorting it down here thinking with the rest of the herd that this is a breach of support. This is where you get undercut and rallies and you're already down. So if I was short, say, from up here, this might be an area where I'd be looking to cover. SNTS found support at the 50 on strong volume. I don't really see the volume. It's trying to hold the 50-day moving average in the top of this, well, the bottom of this gap. It looks like it's still above the bottom of this rising window, I guess you'd call it. But I don't really see this holding the 50-day. It may, but I'm not sure I'd be a buyer. Dr. K, are you a buyer of stocks here? Do you see stocks that you want to buy on this in this environment?
Not in this environment. I want to see. Probably, I'd have to see a really exceptional name set up and go for me to get interested, and I haven't seen that yet. And I probably won't until perhaps the MDM goes up back onto a buy signal, and we really start to see some of these leaders turn back around and complete the right-hand side of the base. Yeah. So I don't really see that. I'm getting all excited to be on the long side here. Look at Apple here. Apple going right to the 50-day moving average. My theory on this one is this is going to roll over and that it's probably going to accompany the NASDAQ on a test of the 50-day moving average, and it's right there now. What's volume looking like on this this morning? You're up 7% right now, so it's on increasing volume, it looks like, on the day, and you're going to break the 50-day moving average. I do think, and we've talked about this many times, I do think Apple is headed lower, and I do think you'll see it back down to these lows eventually here, maybe sooner than later. So Citrix, this is just a piece of garbage, but it's not. I don't really see this as a short. The place to short it. See, here's the late stage failure. Boom, it cracks. Then you get a rally up in a 50-day moving average here. That's kind of where you want to go after it. But Citrix is a thin stock, so it's not one that I've ever really been into playing on the short side. And it's a little wobbly. It can run you in pretty quickly. So I don't deal with it. But it does trade. I think about let's say 1.5 million shares a day, so it's not that bad. But I just noticed it's a little squirrely on an intraday basis, so I've kind of avoided that. But again, here's your break, okay, and here's your rally, and there's your short point. Here if you're shorting in here, I don't know. It's dicey, Maybe it undercuts this low, but what are you really playing for? I'm looking for things that might be breaking down, or in the initial phases of breaking down, because as I said, there's a lot. I see a lot of these late-stage failed bases. Here's an example of one that's a little further developed, but
given that the market's getting weaker and weaker, even as we continue this webinar, it seems to be getting weaker and weaker. As you can see, the Dow's now down over 80. These are candidates here. 3D is a candidate. You know, SSYS is a candidate, and these are a little earlier. This is coming up into the 50-day. You can see that. But again, once you see the breakdown through the 20-day, that's convincing here, and you see that SSYS did it once, especially the second one. I think that you know, that's what you're watching for. So watching for Coors, but we already see Triple D is breaking down, and SSYS, which has broken down, is having a little blip to the 50-day. Now this might, you know, you might wait for it to get up to the 79.50, somewhere around there. You could put a little out here. You're only about 2% away from your stop, so it's not a really a risky trade there, as long as you're not doing, you know, 400% positions like I am. CVLT looks like a head and shoulders pattern. It does, and you might call this is kind of a weird thing here, but you might look at this as a head and shoulders. This sort of throws it off, but I think you can pretty much discount this day. But you're looking for it again. You basically had a base here, okay? And a lot of times the head and shoulders formation is really sort of the follow-up formation to a late-stage failed base, because what happens is the head becomes the point where the stock fails on the late-stage base. So here's Commvault coming out of this little base here, and it breaks out. Now the base itself forms the left shoulder. Once you have the breakout and then the failure, that forms the right shoulder. And my, you know, Neil used to say that in his original pamphlet that, you know, you watch these things set up and then you short them as they break through the 50-day moving average. When I wrote the book for Bill on short selling back in 2004, I had included a lot of my own work, and one of the other things I noticed is that a head and shoulders will usually start out as a late-stage failed base, and what that then means is that you can take a tactical point of view. I would say, you know, breakdown from a head and shoulders might be more of a thematic or a strategic short where you're looking now for a big trend to develop, but once you break down on a late-stage failed base, a lot of times you can take a tactical point of view and look to short the next rally into the 50-day, and that's kind of what you had here, but this would have definitely shoved you out. But after earnings, this occurred on earnings, and you probably could have come back after it in here, and you'd be ahead of the game. Now you're sort of watching to see if it heads down to the neckline, which is a decent possibility. And it trades but see, it trades, what is this? 620,000 shares a day. So one of the reasons I haven't really dealt with it is because it doesn't trade enough shares. I want to see something trading at least 1 million, and preferably a lot more. But hanky-panky, that is the asker of the question, no lie. You're right in identifying it as a head and shoulders formation. Acadia Pharmaceuticals, you know what, I got lines here I got to get rid of. Market's getting worse. CF now busting. You can see that starting to break lower. What is it? You guys all shorting it? You can also see LinkedIn on the 620 was a good sell. See, now it's starting to break. So this is really the point where I'm coming after it on the short side. Going ballistic, as I like to say, and it's starting to break down. So that's working. So this is a good spot for it to reverse. I don't think this offers very much support, this area here, so I would expect it the bounce to be short-lived. If I'm wrong, then it's going to jack through the 10-day, and then I might cover and look to reset on a rally further, or another sign of weakness. So it's kind of, you're just kind of dancing with the thing at this point. Let's go to ACAD real quick. It's gapping up. Is that a Bible gap up, Dr. K?
Let's see this on. Yeah, that would be. I mean, you got some good volume there coming in to the stock. You know, as far as the it's a biotech, so you know you don't have the earnings and sales in place, and therefore it is a riskier name. It also is it's a smaller biotech, as witnessed by the market cap and the price. But the industry group is still strong at fourth. As we know, the biotechs have gotten hit just recently, being one of the stronger groups. So this is a bit of a coin toss in terms of the strengths and weaknesses associated with this. Given where the market's at right now, I'd probably be on the side to not get involved in this, because it's not the best story out there in terms of it being a biotech that's smaller cap, and also in terms of the biotechs that have gotten hit hard lately. So I would probably just, you know, if you're going to play this at all, small position.
Yeah, I think the news today is that they got something going on with Allergan, which is AGN, about some new glaucoma compound that's in preclinical development. So it's a news-oriented thing. I don't think in this market, though, I don't really want to be going long anything. Somebody mentions, this is a book I mentioned on the chat room, Trade the Trader. They're saying pass it on. They love the book. It's an interesting, I found the book interesting. I mean, a lot of the stuff is kind of urbane in terms of the technique, not really well developed in the book. But the essence of the message, of the book's message was that, you know, in this environment, it's a very choppy environment. I think the crowd sees certain things, and I try to look in terms of what is the crowd thinking of right now? What do they see in the charts, and how might I be able to play this within you know, the realm of my own methodologies? And so that's why I'm looking at. I even used an example of this earlier. I'm looking at how traders might be looking at Coors right now. That, oh, it's come down and it's going to bounce because it's on the 20-day, and you got this trend line breakout, depending on how you draw it. And so everybody's looking for this, but it's not happening. And so these little rallies up have been opportunities to shorten the 10-day. And I sort of see that, well, I do see that as my upside stop. It's around 62.09, or it could be the high of the day, which is 61.90. But, you know, watching this thing, let's take a look at the, you can see now you're just starting to get the signal here. You already have the MACD cross, and it's now starting to break down. You got one earlier, but that didn't follow through. But notice how they break it out intraday to get everybody all hot and bothered. And now you're starting to break down, and you're seeing it come in. So, you know, this is where I'm actually shorting the stock in here. I was actually shorting it a little earlier, just on the basis of the MACD cross, just testing that out, and I figured they might try and turn it and run it a little bit, add a little more there. Now we start to go ballistic on it, and that's working. So, you know, this is how I'll approach this on these rallies. And so on a day like today, stocks that I see that are up on the day that are previous short sale targets, that's what I'm looking to go after. You know, not stuff like, this looks like garbage, I know. Like, am I going to go after this here? No. Yeah, I mean, you could if you got a stop in mind, but I think I'm thinking something like this could be juicier in terms of a nice breakdown to the 50-day moving average. Tesla. I guess that's a Tesla. It's really a Z, not an S. I call it Tesla, but what do I know? I'm just not hip. Isn't that the British way, Dr. K? Because I know it's like exclusive, relaxation. I hear stuff like that.
Yeah, there's always subtle differences, and I don't even, you know, they are what they are.
Yeah,
There's
no, but it's
lots of them.
interesting stuff. So, you know, but I think Nikola Tesla, that's, what was he, Romanian or Hungarian or something? What was he? Anybody know?
You know, I used to know this, but now I don't want to say it.
Look it up real quick, can you, Dr. K, and then give me an answer back.
Yeah, he was built quite the crackpot of his day.
He
And
was.
still today, there's a lot of misunderstood views on him. Let's see, Tesla. I thought it was, for some reason I thought it was Polish, but I think that's wrong.
Somebody talking about the
I think he was.
here.
I remember my dad saying there was some. We shared some. Yeah, Austria. Yeah, there we go. Modern day Croatia, because we have some roots that were shared by him. So that makes sense.
Serbia, you could be related. Wouldn't surprise me. Anyways, UVXY, somebody made some good money on this. Yeah, if you're using the 620 model, you know, if you had, this morning you had a buy signal right off the opening, and it never violated on the MACD cross, rather on the moving average crosses here, and the thing is off and running. So for my money, though, I like, I've been playing a little bit of this. I like the buy signal in the TZA earlier this morning. I thought that was better. I don't know. I think you get more juice with it, so we own a little bit of that. And we're short a bunch of these other things I've been talking about. So, but looking good. GMCR percolating. Percolating for what? More downside or more upside or what? Let's see. It's trying to move higher. I don't know. I think the market goes down, it's going to roll over as well. So I don't think I'd be buying it here. It would, in order to have a pocket pivot through the 10-day moving average, you would need to trade more than this volume here, which I believe is 8 million shares. But then it gets back to, you know, which way is the tide moving right now? Is the tide moving in our favor if you want to go long? I don't think so. And I can just, you know, go based on the feedback that the market's giving me on the short side. It seems much easier to make money that way rather than getting smacked on the long side. you know, blocks had a viable gap up. It's failed there. You had the normal porosity. It's trying to hold the 10-day, but no real pocket pivots off the 10-day yet. You know, I think if you like some of these stories and maybe the market's going to turn around and try and rally here and bounce and rally. You know, if we look at the NASDAQ, you're getting, whoops, let's see, where are you right now? You're getting closer to that 50-day. You got Apple trading at the 50-day. So let's see. So I think you could watch some of these stocks. You know, do they bounce off a moving average? Do you see blocks come off the 10-day moving average with a pocket pivot, which would have to be higher than this volume here? I don't know. Dollar up, UUP. Now down 1 point. Yeah, look, it's breaking. You guys have heard me talk about this many times. Is that my view is that the QE, like Dr. K was saying, QE is just going to persist. They don't have any choice because the economy isn't growing, and I don't think you're going to have a good jobs number tomorrow. I'm guessing you're going to come in light, and who knows how the market will react because they may just see this as continuation of QE. But you know, it looks to me like they're just going to continue it until you start to see the dollar get into some trouble, and that seems to be what's going on today. And notice how the dollar's coming off, but it's not really propping anything today but gold and silver, and also you can see crude oil. I wonder if I got any other commodities prices. Let's try, I believe this is wheat, so nothing going on there. But you notice crude oil, silver, gold all moving. I'm sure platinum is probably also moving higher. Yeah, you can see it turning up here on this chart in the nearest futures contract on e-signal. Thanks for the history lesson. Somebody says, what about the stock? No need to touch the stock. It needs the base. And you've broken down, you rallied up into the 10-day moving average. It's you know, it held this 10-day moving average on the run. The way I look at it, when you have a high velocity stock, the trick is, to me, once they start to break down through the 10-day and they can't get back above it, I think that's when this high momentum move has ended. And this is certainly parabolic. I know some people thought it was a climax top around 80, but it wasn't really parabolic enough. This was the initial move. Now you're kind of getting a little parabolic. It needs to build a base. And as we wrote in Forbes the other day, you need to see the stock build a base. And you know, maybe it's on its way to doing that. But to me, I think it's going to need more time, and it may take a period of weeks or months before that completes itself. So there's nothing really to do there. Oh, here's one for you, Dr. K. You ready for this?
Yeah.
Okay. If the stock has been in an uptrend, I'm assuming the stock is any stock. If a stock has been in an uptrend and it doesn't react to the 10 and the 21-day, but only the 50-day, if it shows a pocket pivot on the 10-day, does that still count as a valid pocket pivot despite the fact that it never reacted to the 10-day?
Can you show me an example?
I think I know what they're talking about. If you're using the you're mixing up the 7-week rule with pocket pivot rules.
That's what it sounds like, yeah.
Right, and so the 7-week rule means if a stock has followed the 10-day moving average for 7 weeks or more, then you use a 10-day moving average as your selling guide. If a stock does not follow the 10-day moving average for more than 7 weeks, and instead you're using the 50-day moving average as your selling guide. Pocket pivots can occur off of 10-day moving averages and 50-day moving averages independently of whether you're using the 50-day or the 10-day with the 7-week rule on the stock. That's an entirely different thing. So pocket pivots are fine to buy when they occur off the 10-day moving average. So the interesting question, though, in terms of it gives you some insight into what people sometimes have trouble understanding, you know, what they get mixed up with. If the market breaks down, what inverse ETFs would be best to use, Dr. K? The TZA or the SKU or the DOG or what?
Well, the Russell 2000 related ETFs tend to move in exaggerated fashion compared to NASDAQ because it's a small cap index, the Russell 2000. So on a sell signal or buy signal, I try to lean toward the Russell 2000 unless it's clearly lagging or showing great strength in either direction. You know, then you might want to avoid it. But right now, from the way things look, on a sell signal, I'd probably go for favoring the Russell 2000 related ETFs. And the
So you
Nasdaq's
like,
been weak the Nasdaq's been the weakest index, so I'd probably include that as well on a sell signal.
and it's few, right? And they're moving higher. So, Dr. K, is there a difference between shorting TNA or just buying TZA? Any benefit?
Well, not particularly, because the time frames are pretty short. There is a bias toward these leveraged ETFs going lower. The leveraged that is something like TZA. So I would, in general, general practice, it doesn't really make a difference in terms of how we manage these ETFs. So that's my short answer for you.
Okay. Let's see. I don't really have many more questions. The way I'm looking at this market, I got a handful of short sale targets I'm working. I think I went through all of those in this webinar. And on the long side, I don't really see anything that I'm excited about buying. You look at something, say like Celgene, that's violated its 50-day moving average. Here's your first close below, and now you move below the intraday low of this day, 3 days ago, and boom, it's breaking down a new low. So you're undercutting this low. Maybe it sets up a position for the stock to rally, but that's violated, so that's done. Gilead now has closed once below the 50-day. If you move below this low, intraday low, that's done. Biogen is finding support at the 50-day, so that's a little bit better. Let's see, what other hot stocks are there? REGN is at the 50-day. If you want to try and go long the stock on the basis of it coming down to the 50-day moving average or the 10-week, there's your spot. So I guess you could. Would you step in and buy some of this here, Dr. K?
Well, it's at a logical support point, and if the market is certainly going to find its floor, I think that this is going to be a good buy point here with very little risk. Again, you could take a small nibble here and see how it goes, with the idea that if it heads lower below the 50-day, then you're out at a very small loss. The other way to do it is is just to simply wait for the pocket pivot to set up, which it may very well do in the coming days.
Yeah, if you got one off the 50-day moving average, at least you expect to see some volume support. There's really nothing going on yet. Somebody asked, how do you decide when to buy an inverse fund? Pocket pivot, viable gap up, price, volume, moving average cost? Well, the market direction model would be one way to do it. So that's pretty much it. Or if you want to get fancy, you can buy them into market rallies and trade them on a short-term basis. So let's say, for example, let's use the SQQQ. So for example, you had a buy signal on the SQQQ here on the 620 model, and I think the person asking the question, yeah, I've seen, yeah, Scott, you've been on the chat room, so you're familiar with this. So this is one way to trade these things on a short-term basis. That's one way to enter them. Otherwise, you're using the market direction model to enter them. Thoughts on SMH holding so well? That's a semiconductors index. Whoops. Oops, where am I? Here we go. I don't know. It doesn't look like it's holding up so well today. So, the way I look at it, if the market's into trouble, whatever's holding up today is just going to be the next thing to fall. So that's how I look at it. Is ILMN, Illumina, let me see if I can get that typed in right. Is Illumina a sell today on the basis of a 10-day moving average violation, Dr. K? I don't think so myself. I'll let you hear for that.
Well, if you're using the 7-week rule, then you've got 1, 2, 3, 4, 5, 6. This is the 7th. Well, it violated the 10-day actually. It's like at the beginning of the 7th week, just right at that beginning there. So it has to obey the 10-day for 7 weeks, and it hasn't. So you switch to the 50-day as your selling guide.
Gotcha. So that's what you're using here. If the way this is a high velocity thing for my money, I'd probably be just blowing it out at the 10-day and looking to come back on a pocket pivot. But that would be your logical pullback point. They could do that. Here's your viable gap up. It's held up pretty well since then. But again, it's a market question. If you're gonna you want to back off and take some profits, maybe there are some places where you can do that. And if you're going to try and buy things, then you got to be very careful there as well. Thoughts on AMBA? AMBA sucks. That's what I tell everyone on the chat room. It's like, had a nice earnings announcement yesterday and not going anywhere. So, to me, just a choppy, sloppy stock. Great story, though, and I think we talked about this last week. But just doggy action and not really something I want to play with. It's a thin stock, trades barely under 900,000 shares a day. And, that makes it riskier, I think. So, kind of garbagey to me. Somebody said, I noticed we haven't had any emails on short sale setups. Is it because we are just starting at a point where they may be setting up? You must have missed the beginning of the webinar, because what I talked about is how I see most of these current setups as tactical in nature, not necessarily a lot of thematic setups yet. And I distinguished, so for example, I was using this catamaran, not Citrix. I don't know, that symbol. Why do they use a symbol for this name? Why isn't it CTMN or something like that? But, tactical short is, you have the breakdown here. You could either hit it at the 50-day on the breakdown. We're kind of watching for stuff like that on SSYS or DDD. Whoops. Cores even too. Cores is still bouncing around trying to hold. And then you have the more thematic breakdown, which is when you have a stock breaking down through a head and shoulders neckline and really, really busting. And so when we start to see those setting up, we'll probably put some SSS alerts out. Kind of looking for a bounce somewhere in here, and I think that might be the most optimal place to get short, but we'll see. It's still fluid, and somebody is pointing out that they're holding off on shorting or getting out of the market is to pull back on light volume. I remember an old joke when I worked at O'Neill. I don't know if you remember this, Dr. K, but we used to say, well, the bad news is the market's down 700 points but over the last 2 days, but the good news is it's all been on light volume. So my point there is stocks, markets can come down in light volume.
Yeah.
And
yeah.
What bothers me is that if you're seeing the market come down, where's all the volume support that supposedly comes in to save the market every time it dips? Where is it? It almost seems like you have a buyer's strike, and maybe all this QE, it's run its course now in terms of being a practical tool of liquidity in terms of propping up the markets. Who knows? You don't know for sure, but it is interesting that the market continues to come down, but there's no volume. And the market comes down 10% on no volume. It still came down 10%. So again, my approach has been to focus on individual stocks on the short side and looking for short sale targets to pick off into rallies over the last couple of weeks. And those of you who've been on the chat room, I've been on and talked about it briefly. But mostly we just see these tactical setups, and I've covered a few in here for you to keep an eye on. Let's see. Dr. K, are you ready? Your model is informed in part by the price and volume of leading stocks, but in this QE market there has not been many leading stocks to draw from. How has this affected the model?
Yeah, of course that's a challenge in this environment. That the leading action of leading stocks is very important, and you had years like 2009 where it was junk off the bottom led rallies. But the difference is that back then, even though QE was manipulating the markets higher, we still got trends. So the model was able to capitalize on those trends. In 2012, we stopped getting the trends, and we also stopped seeing leading stocks lead the way, and that is simply that's I guess those two reasons why the 2012 was the worst year for the model. And what's good about challenging periods is that the model is always it's organic, so it's not a black box. It changes with changing conditions, as it did in 2009 with the advent of quantitative easing, and now with the lack of leadership. And with the markets being more and more manipulated by quantitative easing, as we've seen this year, and certainly with all the central banks jumping on board the QE train, that helps the model. It helps the model adjust so that just because the market has a pullback, like it did earlier this year, it doesn't necessarily mean the model is just going to go to a full-blown sell. Or in some cases, it'll just go to cash and then go back to a buy. And obviously that helps the performance in the model. So that certainly we're hoping that this year the model will once again beat the market averages, even if we're not going to get the trend we want, we are aware of QE, and the model is ready to adjust to any new circumstances regarding QE. Certainly, if it does get slowed by central banks, then that's a great thing, because that means less manipulation on the part of federal central banks on the markets. While QE is in full form, the model has taken that into account, and it will continue to. So that's primarily a big reason why the model right now is still in cash. It prefers to the safety of cash in these kinds of challenging environments.
Someone else asked how far away from a sell signal on the MDM. So I would ask, though, is that in inches or centimeters?
Well, and it depends if you're in the U.S. or Europe. But that said, the essence is that the leaders are still well. If we see an accelerated breakdown in leaders, and I'd remind listeners that in 2012 we saw leaders get hit throughout those summer months, and the markets get hit, and just when everything looked the worst, the market would find its floor and go higher. So right now, obviously, the model is weighing the action of the major averages more importantly, taking into account that the market's come up this far and still remain in cash and not going to sell. So we'd have to, like I said earlier, we'd have to see an acceleration in selling pressure or a very anemic bounce, dead cat variety bounce, for the model to switch into a sell at this juncture.
Dr. K, I just IM'd you a question.
How does QE being done by the U.S. and other countries find its way into the U.S. markets? Is it as simple as a Treasury bond and MBS? Well, markets correlate, and so when QE is being, you have the Bank of England, you have the Bank of Japan, and then you have the European Central Bank, and they're all printing aggressively. And obviously, a lot of that money finds its way into their own markets, and markets correlate. So, when you see other world markets doing well, that obviously has a second-order effect, I should say, on other markets, including the U.S. market. And of course, it works in reverse. When we saw the Japanese market get hit ever so hard many days ago, obviously that had a damaging impact on the other world markets.
I look at this EWJ chart, the MSCI Japan Index. These guys are going full bore with QE, Dr. K. And I know we like to talk about, QE in the U.S. being on full bore. What was different here that caused this to bust so wide open when these guys are printing like there is no tomorrow? And based on the look at this chart, it looks like there is no tomorrow for Japan. What do you think unhinges this? And why doesn't this full blast of QE coming from the Japanese central bank, why doesn't it prop it up? And do you think that we could be vulnerable to something like this?
Right. Yeah. Basically, why is the Japanese market, the Nikkei, not finding a floor, a QE floor? And I think there was talk among the governors that there was concern that they've been printing too aggressively, and so that I guess the speculation is that they might slow QE over in Japan. And the other thing is that Japan just went straight up like a rocket. And so this is potentially, it's going to correct more than other markets that didn't go up so far so fast. And therefore, it's having a pullback. I would expect to see the market to find a floor, the Japanese market to have some sort of floor very soon, immediately. If it doesn't, then I would say there's further weight added to the argument that Japan is going to slow its quantitative easing. And then these are the markets. The Japanese market is telegraphing this to us right now.
Yeah, or it's losing its effectiveness. It doesn't have the same effect as it did before. And ultimately, I think the whole, and we both agree that the whole QE thing is just you can't, as you've said many times, you can't create wealth by printing money. And it seems like that's what they think they're going to get away with here by doing this. And you can see in Japan, they're not getting away with anything. That's got to be one of the ugliest 3-week breaks I've ever seen in this index, I guess, since last year. But this is pretty bad. And you got to wonder if if we could be vulnerable to this in the U.S. And if that's the case, then you could be looking at a pretty nasty sell-off even from here. And the fact, like I said earlier, that you're not getting any volume in here, which to some people makes it seem like, oh, it's a benign sell-off, but the velocity without any support coming in really anywhere. And you saw yesterday several intraday rallies that went nowhere. And I know a lot of people in the chat room keep looking for bottoms, and that seems to be what they're oriented to. But I think sheep are looking for a bottom here, and you know that's going to be a dangerous game to play. So I think support. You know, people are asking where EWG maybe at the 200-day moving average. I don't know. That would be logical. Or you undercut this low, which I think you just did, or you're trying to this morning. But man, that's ugly.
Well, I think that you know, in markets past, whenever you get a big break to the downside because of one reason or another, it could be crisis situation, it could be this type of situation where you can't create wealth out of thin air by printing money. The markets have a way of telegraphing that they're going to go a whole lot lower, ahead of going a whole lot lower. That's been the history of markets, which is why the market direction model has managed to call every single major downturn ahead of that downturn. Now, of course, there's always a first time, but I am glad to say, you know, even in 1929, I've run the model through those markets, and it's always been able, you know, whether it's a day before or several days before, it's always managed to move to a sell signal and to capitalize on the downside. And that's so if the U.S. market, and I do believe that Bill's point is relevant, that it could be vulnerable to a sizable correction. And some speculate even worse than what we saw in 2008 because of all this QE, then I believe if history is any guide, we will see the signs. We will see the signs that we have to get out of this market. The market direction model will go into a sell, and we'll hopefully be able to capitalize on that downward move. And by the way, the Japanese market, yeah, it hasn't had this kind of negative reaction since Fukushima disaster in 2011, and then prior to that was the financial disaster of 2008. So, you know, I'm just looking at the weekly on the EWJ. That's not really normal pullback action after, I mean, the market has risen quite aggressively, so you do expect some sort of correction, but this is a little bit overkill. So it just might be that the Bank of Japan makes some sort of announcement in the coming days that they are going to be slowing quantitative easing down.
Or the yen collapses. How's that? Does that you give any possibility to that?
Well, there's a lot of cross currents with the yen versus world currencies, so yeah, it's difficult to speculate on something like that. It's kind of like trying to speculate on where gold's going to go from here. Just there's so many cross currents.
In fact, speaking of gold, let's see. It's trying to come off of this low. You know, you pulled down, you retested here, and now you're trying to move off, and it's possible that you could have put in a bottom. That's a possibility, but I'm not going to trade it until I see some sort of discernible sign. You might call this a pocket pivot coming up to the 10-day, but again, there's one factor working against this is that you're in a multi-month downtrend, and pocket pivots occurring from multi-month downtrends. You see, I'm heading this question off before we get it, Dr. K. Pocket pivots occurring after multi-month downtrends while the stock is under both the 50 and 200-day moving averages do not have a high probability of working. But watch for how it acts when we come up to the 50-day in this area of prior resistance up here, just under 1,500, or on the gold futures here. So, anyways,
if you've been in a bear market and then you get stocks that are turning back around up off their bottoms, and they're one of the first to do so, and they have good fundamentals, and the 50 and 200-day are ways away from their pocket pivots. Those are playable. Those are exceptional circumstances, but the odds are on your side to actually get in play those pocket pivots.
Okay. Somebody's asking EJW. You mean EWJ? I'm assuming possible pod setup. I don't know. Again, I think we have a situation of a little bit of knowledge being a dangerous thing. I don't really see a pod here, so I wouldn't be trying to short it here. Although, you know, it could continue lower. So I don't really understand what that question is about, since there's nothing here that's a pod, unless you're talking about this being a big pod. If that was a setup, it was a while ago. It's a little bit too late now, so you're kind of late to the party there, if that's what you're thinking. But as we pointed out, I guess this would be, let's see. How do I crush this down? There we go. You're looking at this. It's too long to be a pod, but it's just a big cup occurring over 2 years or so, and that's not a pod. So that's not a punch bowl of death. It is a big bowl shape, but it's too long. It's not straight down, straight up. I think there are other signals if you wanted to short the Nikkei. I think there were other signals probably evident at the time. Maybe this gap below the 20-day, but it doesn't apply. The pod doesn't apply to ETFs. So, what's CBOE WOR? What does that mean? Somebody just hit us with that. Worthington Industries, not a stock I'm interested in. Is that what you're talking about? CBOE, not really anything there either, just going sideways. So, not really stocks that we're looking at buying, I don't think. Right, Dr. K?
That's correct.
Yeah, so anyways, it's been an hour, so I think you're getting a sort of a flavor of where we're at with this market. I think it looks dangerous, so I think if you're going to try and play the long side, good luck. Keep your stops in if you're going to try and buy some of these pullbacks. But, you don't know what's going on here. And I think that the fact that the market direction model is in a cash signal attests to the fact that it's not that easy to figure out what's going on here. However, I think if you take a stock-by-stock approach to the market, and it could even work on the long side, if you see some stocks pulling into a 50-day or a 10-day moving average, and then the market turns, and then they issue a pocket pivot, maybe those become playable as trades. But I'd be very, very careful on the long side right now. You don't know how much worse this is going to get. Although you're getting close to a point, as I pointed out, and I'll finish up with what I started out this webinar with. The scenario here might be where you see the S&P is at its 50-day, it goes through the 50-day, and this brings the NASDAQ down to its 50-day, and then you get a bounce. So that may be the scenario we're looking at. That would be similar to what happened back in April when the NASDAQ went through the 50-day first, and the S&P bounced off the 50-day. So this time around it could reverse, and you could see the NASDAQ bounce off. If the NASDAQ doesn't bounce off and goes straight through the 50-day, then I think you've got some problems. So basic watchword here is caution, and I would say those of you interested on messing with the short side, you want to ask me some questions in real time. I'll be up in the chat room in about another hour or so, about 11:30 my time, and I'll be happy to answer any real-time questions at that point. But I'm generally in there around 8:30 my time in the mornings, or 11:30 in the afternoons, or later in the morning, afternoon for those of you on the East Coast. If you have any questions or want to talk about the short side and what's going on. So, and Dr. K has been showing up, so he'll be there. He understands that you all need his wisdom and guidance, so I think we'll see him there more often. You think so, Dr. K?
Yeah, probably it's going to be more like around the 8 a.m., 8:30 a.m. PST
Pacific time? Yeah, which is like 4 p.m. your time, which is a good time. Yeah, so, around 8 a.m., Dr. K be in there most days. 8:30 you might see me in there, or 11:30. Some days I'll do both of those periods, and some days just one, depending on what I've got going on. So anyways, hope to see you guys all in the chat room, and we'll talk to you next week. Take care.
So long, everyone.